Hi everybody, Dave Rauch here. Welcome to The Maintenance Manager. And today I'm joined by Wendy Weber. And Wendy is the owner of Insurance Services of the West.
Yes.
And today we are at the CAI Legal and Insurance Conference. And we're going to talk a little bit about that. But first, Wendy, if you could tell us a little bit about your company.
Sure, thank you. I'm Wendy Weber. My company is actually Weber Insurance Services Incorporated, but in California, there's a lot of legislation and you're not allowed to have a name of your company that's too similar to anybody else's, so I have to do business as Insurance Services of the West in California.
I like that name.
I do too.
Yep.
And our website, it was very hard finding a domain name that wasn't taken. So we are HOAspecialist.com, which I actually like better. So you can find information and articles on there, from you guys on building inspections.
Great. So let's talk a little bit about insurance before we get into some of the national trends with insurance. But you are part of CIRMS.
Yes.
And this is really the insurance component of CAI's CIRMS. Can you explain a little bit about CIRMS and then a little bit about insurance, which is not quite as complex as crypto, but still very complicated?
CIRMS is an acronym. It's CIRMS. It stands for Community Insurance Risk Management Specialist. And through CAI, it is a designation that confirms that this insurance professional has done all the extra training and been certified in additional information on how to correctly insure all of the things that need insuring for homeowner associations.
And I know insurance, like I said, is really complicated. And you've got the carrier.
Okay.
And you've got an MGA, and then you've got the broker.
Yes.
And then you have the reinsurance, which is kind of like Fannie Mae and Freddie Mac, which buys the insurance policies. But it's the broker that actually works with the HOA and with the consumer of insurance policies. And the MGA is like the wholesaler. Do I have that right?
Yes, yes.
They're between the broker and the carrier.
Right.
Okay.
So someone like myself, an independent broker, will have to go through an MGA for certain kinds of coverages. So for ENS, which is like excess markets because I can't get an admitted market, or for earthquake policies, for example, a broker like myself will go through an MGA like an AmWinds or a CRC to get a policy from Lloyd's of London for earthquake or difference in conditions or floods, which we heard about today.
I was at an insurance class yesterday with you, and it seems to be a big issue, which is the profit sharing, which is, as everybody knows, the management company industry, the HOA management industry is getting rolled up pretty quickly by private equity. The push is on to find new revenue sources for the management companies, and some of them are getting into selling insurance. And they call it revenue sharing, which I thought was an interesting
revenue sharing.
name.
It sounds a little nicer. You know, that has been going on for a long time. Some of the bigger companies that I have found over the last 10 years will have their own in-house insurance department. They'll hire an insurance agent who becomes their employee, or sometimes their employee doesn't have an insurance license, and that's where it gets sticky. But if they have a license, they're doing their own insurance. So an independent broker like myself doesn't do much business with them because they already have somebody shopping their insurance. They're keeping the commissions from the insurance because it's their employee who's placing the insurance, their employee agent. So when it comes to that, the revenue sharing isn't quite as questionable or debatable as yesterday's discussion was. Yesterday's discussion at the conference here is more about what's going on, as far as what I see going on, is where the other independent property management firms are requiring that agents give up a big portion of their commission to the management company. And there's legal issues with that, and we're all trying to figure out how to make this work a little bit better.
It was a passionate meeting.
It was. As far as insurance licenses, we're all looking at this, and it's a mixed bag of responses because we go to a lot of trouble to be licensed, and we're required by the state to be licensed to conduct insurance, purchase insurance, and place it for our clients. So to then take the commission from all that work and hand it over, it doesn't seem ethical. So we're trying to understand how this works. Like, how could we do that and not get into legal trouble? And is this being required of other licensed professions like legal? Are they doing this with their attorneys? Are they doing this with their other business partners, and we're trying to understand how that works and maybe have a cohesive picture of what needs to be done.
And I'm pretty sure CAI will work through it.
That's what I hope.
And get it resolved, or we can hope anyhow. The other big issue, I think, was cyber.
Okay.
Was the cyber insurance, and were there any other issues that were touched on at this conference that are big hot button issues?
Being able to insure clients to their full value. That's really become a problem because lenders require that property be insured to value. So if you have a carrier coming back and saying, I see that your valuation report says 10 million, but we're only going to give you 5. What do you do? Because now your client is legally liable for not having enough insurance, but you can't get it.
Right.
So it's throwing everything into upheaval, because if that is the case, then Fannie Mae and Freddie Mac don't want to give a loan or a mortgage on a property that's not properly insured to value. So that is touchy.
Yeah. And what I heard in that last conference was that you really should get an evaluation, a replacement value once a year, which obviously a lot of HOAs might be reluctant to do because of the cost. I think they cost $2,000 to $3,000 or $4,000 to do one of those valuations. I don't know.
You know, it depends if they have like a professional building engineering company come through and do it. Agents, we all have accepted software tools we use for valuation reports. So I generate one every year for all of my clients. There's no cost to that. It's part of our insurance business. So if they talk to their agent, they can get an updated report every year.
Yeah.
A real report that goes through every component, that's different. That probably goes into what you guys do.
Yeah. Well, one thing I know for sure is that costs are going up all the time, and building values are almost always going up.
Yes.
But let's talk about the insurance crisis that really hit last year and a little bit of the year before, but it seemed that insurance crisis seems to be abating somewhat.
Okay.
So nationally, insurance costs went up 20% last year, almost on average, but here in California, they went up 50%, 100%, 500% in some places where they had fire zones.
Exactly.
So can you give us your perspective on that insurance crisis?
Firstly, the thing that comes up with a lot of associations, the ones that weren't in the fires, is deferred maintenance. So their building is going to cost so much to insure, and carriers don't want to insure it if they aren't preventatively maintaining their properties. And that costs money, but it doesn't cost as much as having to go back and fix it when there's damage due to deferred maintenance. So the big takeaway from all of our carriers is insurance is not a maintenance policy. You are supposed to be maintaining the buildings. So while it's sad to see HOAs struggling to maintain, we're also seeing that to some extent what's happening right now is kind of forcing buildings to be maintained as they should be and should have been. And it's expensive because it's been deferred. So now we're going back and fixing things. The crisis, that is an issue in California that's very messy. The California Fair Plan, there's a lot of concern that it's not actually properly funded. It's not well enough funded, that it's going to say solvent. And that's going to hit everybody. And so the folks that are having a hard time finding insurance are probably going to have to go to other surplus lines, not admitted markets like a Lloyd's of London, things not admitted that are not based in California.
Right.
It's not horrible, but it's very expensive. So that's where we come back to a lot of these carriers are not going to insure value. So you have to figure out and work with attorneys and carriers to understand, and banks, if we are not insured to value, will you still please honor the mortgages that are in place? So if we don't have enough, can the HOA assess? Can they reserve enough to self-insure what couldn't be covered? That's where I see it heading. And that's what's kind of happening in the fire areas too, here in California.
And from what I heard these past few days, the market, the insurance market is softening. The costs aren't going up.
True.
And that, I don't know if that's nationally. I think that's nationally. There were no big hurricanes that hit landfall last year. That's helped.
Yes.
So do you think that that insurance cost for HOAs is going to stabilize through this year into next year? I mean, do you see anything we don't see here?
I hope so. I mean, I hope that. I've had some good news with some of our clients. Some of our HOAs have had flat premiums, so like no increase over the previous year, and that was amazing. Some have had one or two, I can count on one hand, have had a little bit of a decrease.
Oh,
So
wow.
if they've maintained and not had any claims, some of the carriers, it just falls within their algorithms, so they price them accordingly. And then others, because of the fires, they've had 20% increases, and that keeps happening. That's happening this year. What I don't see happening is that increasing again next year. So it looks like we're finally evening out or right sizing. That's my hope. We're in a cycle that'll
Right.
go back a little bit.
You're in Los Angeles.
Yes.
And there's been a lot of talk about the fires and a lot of sad stories.
Yes.
And did you have any clients that were affected by the fires?
I didn't have any clients right in Palisades or Eaton where the damage was worst. But in a lot of the coast areas that we cover, so Santa Monica, Brentwood, UCLA area, Westwood, I have been shocked how many denial to even offer a quote has come out. So what has happened is those fires have caused new fire mapping from all the carriers. So where they used to be like, we don't want to insure a property within 1 or 2 miles, it's now within 10 miles. And so much of LA is within 10 miles of brush somewhere. So it's very hard to find carriers that will insure. So we're having trouble finding coverage for clients that were not burned in the fire, but they're within 10 miles.
Interesting. Fire mapping.
Yes.
That's a whole nother
That's a whole other touchy subject.
Yeah, because I know some of our clients in San Diego and Orange County, they aren't anywhere near the forest or
They're not.
brush or anything. They're like in huge subdivisions, and yet they're in the fire zone having to pay 100, 200% more in insurance.
It's amazing. They're in
who does
urban
the
areas.
Fire mapping?
Each carrier has their own software, and it's driven by their own algorithm. So they pop in their parameters, not within this far, not within the, and it went from being this map to being this kind of a map.
Gotcha.
That's why I mentioned like UCLA, Westwood, Brentwood. These are all very busy urban areas, and they're all being denied offers of coverage. You're outside of our appetite. That's what the carriers like to say.
Back to Champlain Tower South, which I believe is what kind of woke up Fannie Mae, Freddie Mac to the risk, to deferred maintenance. It woke up the insurance industry too, because I think both entities realized that the boards are not required to properly maintain their communities.
True.
And that was kind of like the epiphany.
Yes.
The aha moment. Oh, this is a problem.
Yes.
And so I guess the lesson of Champlain Tower South for Fannie Mae and Freddie Mac was to, start blacklisting HOAs, and I think there's probably 6,000 HOAs on the blacklist now.
Isn't that shocking?
I mean,
how is there a list that long that we don't have
that's
information
a lot.
on?
Well, some of our clients, a couple of clients I know of that are on it.
Okay.
And they're not really in the worst shape either. But, there's a number of reasons why you get on that blacklist. But anyhow, the one that's near and dear to my heart is the deferred maintenance.
Yes.
Of course.
Yes.
A lot of HOAs that have never done maintenance, didn't have a maintenance plan, don't have a maintenance program, their places are falling apart.
Yes.
And it was like, wow, but we're saving money and we're not raising dues.
Right.
And so they're heroes to the residents, especially if some of the residents, like at Champlain Tower South, are on fixed incomes.
That's understandable.
So I don't know if there's any answer as to what you tell these boards about how to maintain or when to maintain or using preventive maintenance as well as corrective maintenance. But any insight that you might have would be much appreciated.
Because all the carriers we go to now, all of them want proof of updates. So you can't get away from doing maintenance. So as much as boards don't want to raise dues, insurance is almost always the largest line item in their budget. I look at that. I'm like, that is going up 100x, whatever it is. You don't have a choice. You don't have a choice but to maintain. So I get that you don't want to spend the money, but the insurance carriers will not offer coverage if you don't show them proof of updates, which is anything from utilities, electrical panels, plumbing. We could talk for an hour on all of these issues. So if you can't show proof of replacing and updating those items, I'm pushing all of them, go get proactive inspections. I push them over to your company. I push them to anybody I can think of. I have a handful of vendors I like too. I'm like, have them do a professional report, give it to the board. You now own that information instead of waiting on a carrier to inspect and own that information and give you a deadline. And then you decide, and the person doing the inspection, professional, will give you a recommendation. You need to do this and this and this. Then you need to have the board take action to do those things.
Gotcha.
You have to start somewhere.
And we were talking before, and if you could touch on it again, the inspection reports that insurance companies require to write for an HOA, those aren't every year, are they?
So are you talking about reserve studies maybe?
No, not the reserve studies, but the other
actual inspections.
Yeah, actual inspections.
So
carriers, what triggers them? How often do they do them?
Some of the carriers have a routine of doing them every 4 or 5 years.
Gotcha.
But that was before the fires, before the last 5 years. I don't know how they might do it more often. Right now, what I see is every time you change a carrier, you trigger an inspection. So a lot of my clients have had to change carriers. A lot of the main carriers have left California or they reached capacity, which got spoken about today. Once you have 1 or 2 big carriers leave California or certain carriers no longer write new business, all of that is falling on who remains behind, and they're at capacity because now all the HOAs they have just doubled and tripled. They don't have room, capacity, reinsurance enough to do any more. So they're very picky. They're like, the ones we take on, we want to see pictures, we want receipts, we want estimates, we want inspections. So that's what's happening because we're changing carriers. So it's happening a lot.
That's actually good news for us.
Yeah.
I mean, because it sounds to me like that if the association has a monthly recurring maintenance program and has photographs of all the things that they're maintaining and repairing, that would augur well to the carrier to get good premiums or better premiums, or at least get insured.
Right. It's proof of preventative maintenance. That's what it really is.
Gotcha.
And there was a good general manager in one of our sessions yesterday. She runs a property and she said that's what she does. She has pictures and she has the licensed professionals take pictures every year of all these different things on their inspections that she has done. And she recommended, which we like this, start putting regular inspections into the reserves. Like plan on it every couple of years, getting the association's own inspection reports.
Right. And the inspections is another interesting topic because here in California we have 326, SB 326, which requires the deck inspections. Right. Which has been another huge subject. Yeah. But there's a lot of other building components that need inspecting in addition to the decks. The decks are only the most visual, the most, I guess, they've been deadly in the past here with the balcony collapse in Berkeley. But desiltation basins, perimeter fencing, entry gates, irrigation lines. There's a lot of things that need inspection. Actually, down here in San Diego City, and along the coast, there's a lot of deterioration of the concrete spalling. Same thing that happened in Champlain Tower South.
Because of the air, salt water?
The salt water, the water gets into the rebar expands, and it will expand 20 times its size if it has enough water. Wow. And that causes the concrete to spall out. And so we've seen a lot of that around here. It's wet. I mean, it is a high desert, but still we get a lot of rain and there's moisture off the coast. So
do they need to do regular inspections of their rebar? What are they doing?
In my opinion, every common area component needs to be inspected at least once a year. Because you can never tell what kids are doing to it, what cars run into certain common area components. So everything should be inspected at least once a year. Not the detailed inspections like they're doing with the decks. That's done by an engineer or an architect. But visual inspections.
Is that similar to like a site walk survey like managers do? But they're always wondering exactly what they need to be doing in those surveys.
Yeah, that's the monthly landscape walk typically. And we go on a lot of those.
Oh, that makes sense.
Any insight that you have for the board of directors? In other words, if you're, most boards are lay people, they aren't insurance professionals, they're not architects. So any insight?
How about board education?
Yeah.
You like that one.
I love that one. Yeah.
I really try to help boards be educated. So we've talked about this in this conference too. Like, should there be a requirement to have boards receive training? And CAI has not pushed on that because it's hard to get volunteers on the board. So the more requirements you put on them, the less likely they might be. But what I'm finding is maybe it's the way we put it to them rather than a requirement. Why wouldn't you want this? And I, as an insurance professional, I actually sponsor my board clients to go get the training. I actually do the insurance module of board training for CAI. So if I can help sponsor my board members to attend it, they get to hear from attorneys, maintenance professionals, reserve professionals, as well as an insurance professional about what the requirements of being on the board is and what the requirements are with civil code for everything in the association. You know, it's a few hours over 2 Saturdays. Some of the CAI chapters do it on a Tuesday, but it's really getting them to it. And so they seem to appreciate it. So I think it's all in how we're putting it out to them. They should come and do it. Then they actually learn and meet who professionals are that can help them with all this, and they can ask live questions. So that would be my big takeaway for the boards is come to CAI and get educated. We're here to help you. Talk to a partner.
And that's great advice. I also would point them to CAI's website, which has a lot of free downloadable educational materials, how to serve on a board, how to be a treasurer, all kinds of stuff.
And where to go. It's free.
People like free. So, okay. Any other insight, any claims, interesting claim stories that you've had? You see, I'm assuming you see mostly water leak claims?
We do.
What's the claims profile that you see?
So the big push now is try to find a way to reserve funds for repairs and take care of them yourself. Go for a high deductible.
And try not to put
try not to have a claim because it's going to hurt the insurance the following year. That didn't used to be a given. It used to be like, let's see. You won't get canceled. I could never be sure they would ever be canceled. Now I'm pretty sure. Your $10,000 premium is going to be $20,000 if you place that claim. And I think my big push would be have a protocol for claims. Bring it to the board. Owners are not required to go through the board to place a claim. That's a big misunderstanding. They don't have to. I get a lot of calls from owners directly as an insurance professional. Hey, can you help me place this claim? And they are allowed to do that. I really like them to go through the board or come through me and have a protocol because I'm like, you know what, let's talk about this. What is your estimate? $3,000 for this kitchen leak. Okay, but your deductible is $5,000. So you understand this claim doesn't make any sense. They just don't understand that.
They don't understand.
The deductible. So I'm like, go through your board or have a conversation before you place the claim. Do I have any positive claim stories? Really
crazy claim stories.
There is one that went to a lawsuit, a tenant renting a unit in an HOA. The roof failed during a big rainstorm, fell in and injured somebody, unfortunately.
Really? Wow.
Yeah. And we, as the insurance professional, nor the carrier, nor the management company could get hold of the owner of the unit. So there's a big confusion there because we don't actually do business with the tenant. We are the insured's agent, and the insured is the association. So I couldn't really deal with the tenant. I'm like, you have to go to the owner who has to go to the association. And because it became so convoluted, it became a lawsuit. And it did finally get settled 2.5 years later for $30,000. No, it actually became $100,000.
Wow.
All because of a lack of protocol and communication. I'm like, there should have just been something in place there. Unit owner should have had insurance to help deal with the tenant. And the HOA could have communicated with the owner. It could have been maybe less painful.
Gotcha. And back to the claim size.
Yes.
That an HOA should probably not submit as a claim. Is that like $5 or $10 grand, or is that more like 20, 30,000? What?
That's a good question.
What amount do you think would be smart for a HOA to absorb versus submit a claim? And you know what? I guess that's a loaded question because it must vary. Yeah, it must depend on the size of the association, their budget, and a lot of things. So.
It depends on their deductible as well. So because I push everybody to a larger deductible, I'd say up to $20,000. you should try to find a way to take care of that, do the repairs directly. Now that's property. Once we start talking about liability, which they spoke about today, liability doesn't always have a deductible. So you have to decide, sometimes it does, how much do you want to absorb? If the HOA is liable for something that happened to somebody's car or bike or an injury, how much do they want to pay up front rather than placing a claim?
Gotcha.
It depends. It depends. So you want to have a conversation and have a protocol about how do we discuss what's coming up? How do we decide if we want to place a claim?
And I think that's great advice. The key being, you really got to talk about it and decide if you should place that claim.
Yes.
Because if your premiums go up, it's going to be a lot more than that claim amount.
Exactly.
Let's switch to exclusions.
Okay.
Because I know insurance companies, carriers,
yes,
are pretty good with excluding things that a lot of board members or homeowners are not aware of.
Okay.
Or at least they read it. Sometimes they read the policy
yes,
and understand there's things in there that are excluded from insurance.
Yes.
A lot of times they don't read it.
They don't read it and they don't understand it.
Yeah.
So we were talking about carriers. So when some of the big carriers left California or don't write any more business, and we as independent brokers have to go and get excess and surplus lines, we call it E&S, they are very restrictive. And so people don't realize, oh, we changed carriers. Oh, they no longer cover the roof, or they no longer are going to insure your roof at the full replacement cost. So you have a $50,000 roof, but you're only going to get $25,000 with this carrier. They don't realize that.
So that's not necessarily a direct exclusion. They're just saying they're not going to replace the full roof value.
Yes.
So what would a board then need to do to make sure they're going to get full insurance coverage on the replacement of the roof?
Probably have it in reserves. Be like, we have enough to deal with the roof if something happens, and that's what the carriers want to see, because they're like, you're not actually insured to value. It's coming back to that again.
Well, couldn't they go to another carrier and get a quote from somebody else then?
They can try, but that's the problem. Like the other carriers, they're all kind of in this area where they don't want to insure certain things. Exclusions, sometimes leaks. We are excluding leaks. We are excluding certain kinds of plumbing. Plumbing leaks.
Plumbing leaks. Gotcha.
Or these excess surplus lines carriers are very specific. Like, we will not do anything but the main lines. So anything that services a unit, we are not insuring. So they will just drop a lot of things that used to be considered insured.
Gotcha. And the board needs to rely on the broker to interpret that, explain it.
Yes, explain it. And
not the manager.
No. Not the manager.
So that's why I hear over and over and over again to have the board meet with their insurance broker to go through the coverage.
Right.
And are you able to do that? You have
all
the
time
to
and now with the advent of online meetings, we do Google Meet and Zoom meetings with boards all the time.
Okay.
I really try to meet with our boards at least once a year. Nobody really wants to have a Zoom call about insurance, so they'd But we try to go through it, and I also explain it really is a fiduciary duty. You know, this is your biggest line item on your budget. You probably should understand where this is going.
Now, it's the largest line item on the budget?
Often.
Even bigger than utilities and management?
Often.
Yeah,
I mean, if you look at it as an expense, I mean, we would have to look at, a specific. But sure, there are some with $1 million policies, these big, standalone buildings with an on-site manager. Sure, they have a lot of expenses, but their insurance is probably close to $1 million.
Yeah.
So, shouldn't they understand what's not going to be covered?
It's one of the top three.
It is.
Yeah.
It is.
Utilities, management, insurance.
Right. Right.
Landscape maintenance.
Maybe.
Yeah. Building maintenance, further down the list. But
exactly.
Last question.
Okay.
What's one of the most misunderstood things that boards have about insurance? Is there any one or two things that they really need help understanding or getting education on?
We still hear, even after all these years, we want 3 quotes. And I'm like, that's not easy. That's not what it used to be. So if you tell your manager, go talk to 3 brokers, you're shooting yourself in the foot, because the brokers are going to the same few markets that are remaining. So if you come to me, Wendy, please go get us some quotes. I'm going to try to get you 3 quotes. I'm going to try to get as many as I can. There's only a few markets out there. So now the next guy comes along because you asked them to go to 3 brokers, and he's going to several markets, and he's going to be blocked. Oh, somebody already came, Wendy. They won't tell you who, and submitted a request. So now you've wasted that broker's time. Now the carrier's frustrated because don't they realize they already have somebody shopping the market?
Yeah.
Pick the broker you like working with as a board member and let them do the work for you. That's my big advice.
And that's not what they're used to.
No.
But that is so true, because I just heard in a session that the carrier will only give one quote for one property in a certain period of time.
Yep.
And that's something I didn't understand completely, but I think I do now. And so really, they need to stick with that broker.
Yep.
And
let them do the job.
broker shops it out to different carriers.
And that's what brokers do. We broker with many different insurance carriers. We know which ones work. Some will cover San Diego, some will not, some like Monterey. We know where to go for the coverages we need, and it's a tough market right now. So you want the broker to have a good relationship with the carriers. You don't want to be going around him or her and blocking the markets.
Yep.
Yeah.
Well, Wendy, thank you so much. We appreciate your time here.
Nice to see you,
It's been
Dave.
great talking.
Thank you.
And thanks, everybody. Please stay safe.